Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 22nd through Friday, March 26th, 2010. Well, folks, let's get right into the projections for next week on a technical basis, but first, quickly, I want to discuss what happened last week across the markets. Last week, we saw a very fascinating week. It was Options X. We all know the craziness that can happen on Options X, but believe it or not, it was not that crazy. Monday through Thursday, extremely light volume, although inching volume each day towards the options expiration Friday, we finally got our first day above 200 million on the SPY in volume. And again, as I said, guys, and this is one of the projections I've given you guys, day one over the past really 6 weeks. If you get more than 200 million in this market in volume, you will have a down day. Sure enough, that was the case on Friday, and it was a down day. 200 million right here on the volume. You can see the volume below. Look at the volume here. Monday, Tuesday, Wednesday, Thursday, all light volume days, although inching slightly up each day. And on Friday, Options X, you get over 200 million. And what did the markets do? They were down. The previous 4 days, under 200 million in volume on the SPY, and the markets were flat to positive pretty much every single day. Really an amazing run the market has had. 6 weeks essentially from February 5th right here. Here's your February 5th trend line, or check that candlestick pattern. And you can see the bottoming tail, folks. And that's, again, where we had mentioned that there would be a bottoming. Now, the market extended far past what I even thought. I thought we would probably possibly go as high as double top here, which again was right around here. Here's your double top projection line. But for the most part, as you can see, you actually paused right on it and then reversed even higher to go up to this 117.30-ish area before reversing on Friday to come back to about 115.97, close on the SPY. So it's been an unbelievable run in the markets, really almost vertical in terms of market movement, and that has just continued to be up days. We've talked about the light volume, guys. Volume for this type of move. I mean, look at how vertical this move is, and look at how light the volume is in here. I mean, this is ridiculous. It's borderline the lightest in the past really year and a half volume, except for maybe holidays right around Christmas and New Year's time frames. But to see that type of volume with that much of a vertical move is a little bit of a surprise, and it tells you that, again, the institutions are not backing this with volume. Institutional buying would signal heavier volume, and you're just not getting it. So again, while the markets continue to move up, it's not on the back of institutional buying that we're seeing it. All right, it could be retail, it could be just the lack of sellers, and that's what I think it is, the lack of sellers. When you have no sellers, really, as long as there's 1 or 2 buyers, you're going to see the market move up. It doesn't matter if it's retail, mutual fund, institutional hedge fund, whatever it is. If it's just 1 or 2 of them, that's enough to continue to push this market up pretty vertically. Again, here's your sell-off from our call of the January 11th top. January 11th right here. Again, market stays sideways. This is where I called the top, and the market then reversed to the downside, paused, reversed even more to the downside, dumping basically 9% in a matter of a month or so. But then again, the vertical reversal, we all knew the reversal was coming off of this as we called for it. The question again was, how high would it go? I thought it would probably go in the realm of 112 to 1, obviously the double top. That was an extension move right there, an unbelievable move, and then to break through even so, I was very surprised at that, and I did not think that would happen, but sure enough it did, and they pushed it up even more. Now again, guys, Options X is over. What do we see next week? I mean, that's what it comes down to. Let's go to this 10-minute chart first, and I want to talk a little bit about Friday's action. Again, very sharp fall. We had this nice trend line here, the yellow trend line, and what I'm going to do here is show you where this yellow trend line comes from. It comes from all the way back here, as you can see, and you get a line connecting these lows, and I said this to people on Thursday in our Premium Research Center video. I said, if this yellow line breaks, you could actually have a pretty solid down move, and that's exactly what happened. Friday starts, we break on the first candle, and look at the markets dump out. Came all the way down to about 115.50. Before bouncing. You have a nice little in spirit of bear flag here, and I want everyone to realize this, folks, because this is an amazing thing. All right, in spirit of bear flag, and I actually did a free video on Friday. Unfortunately, it didn't come out correctly, but I talked about it in the video about how this was a beautiful bear flag, and I think I even did some posts on our free blog on this. Now, you have a beautiful bear flag, but I said, guys, be careful. The volume here late in the day is so light that I would not be surprised if it tries to break down and just fails. Sure enough, that's exactly what it did into the close. And again, I think you can look back and find those articles on our blog, on our free Rant and Rave blog. But in any case, notice the breakdown here. This is an in spirit of bear flag, about as perfect as you can have. And then sure enough, it breaks down, and then the institutional players come in and save it. Because remember, Options X, what's so key about Options X, guys? Options X is always done to close stocks at certain levels where the institutions will make the most premium on those options that they sold. So Taking that into account, think about a stock. For instance, let's take a look at a stock like Amazon. Amazon's a good example of this. All right, so Amazon here, all right, starts to break down, but we all know the institutions want to close it where the strike price has the most calls one way and the most puts the other way. So they want to close it where it expires worthless for the majority of those, both calls and puts. Sure enough, what level do you probably think that is? Take a second, let's think about it, and the answer here would be $130, right? I mean, you think about why would they close it at 131? You figure people are more into the even numbers, so they buy calls on the one side of 130 and the other side of puts on 130. So both sides of 130. So where would this stock close to basically negate all those calls and all those puts by the institutions to make sure that they reap the max reward? The price would be at $130. What did the stock price do here? It started to break down below 130. Where did it get pushed back to? Right back to 130, guys. I mean, this is the craziness of understanding options. You have to understand these games they play, and that's why, again, guys, option games are rigged. All right. Now, again, I love the options occasionally, but I'll never hold them. All right. I play options a couple times a year, maybe at max. And what will happen is I buy them a month or two in advance, or maybe even more, and I'll hold them for a week or two. I look for a little bit of a gain, a nice chunk of change, and then I move out of them. I never hold them into options expiration because games like this will happen, folks. Absolutely. You think you're in the money on an options play? You never know until it closes because they might push that stock down to that strike price that you had because you have the strike price a majority of other people have as well, and they want to make sure they keep your premium and not have to pay off any. All right, so understand these rules, folks. Now, going back to the market, let's touch base on it. In spirit of bear flag on Friday, it starts to break down and fails and reverses to close right here. They wanted to close this market on the SPY 116. That's exactly where it closed, just a couple pennies below. Now, Monday comes into play. What are we looking for Monday? Let's project into next week. What you're seeing here, if you move up here, guys, this is your necktie. 50 moving average sloping to 200. That's going to be your key level. That's at 116.20. Good resistance there. If you continue up, you could all the way go into this pivot low from the other day on Thursday, which will be at 116.65-ish or 116.60. And then if you get through that, you're going to go here to 117. On the downside, look for this double bottom that was put in late on Friday as support. 115.50, that will be support. All right, on the 60-minute, what can we look at? Now, this is a fascinating chart, guys, for a couple reasons. See this white line right up here, this key white line? This is everything to me, and this was everything to me, and I described this to my premium members. As you can see here, guys, this line was holding this market up. It hit here, bounced. It hit here, bounced, bounced, bounced. Finally, gapped up here on the 12th of March and fell back down and got below, confirmed it the following day. That means it's a breakdown. Once you in the money stocks confirm a move, you have to understand what that means. Now, it means it won't get back above this white line. Doesn't mean it can't retest it. We talked about that. So sure enough, it goes up here, retest this white line. That's your shorting opportunity. And I spent a lot of time to the premium members discussing how to understand this play and make sure that you don't want to short right here. You want to wait for the retest on a play like this. And this goes on all charts, time frames. Daily, weekly, monthly, intraday, 10-minute, 1-minute, 60-minute. Doesn't matter. This play, you don't want to short the breakdown. You want to wait for the retrace back to the trend line and short that. And as you can see, if you had done that, you get that short right off up here, and the market can fall, and you're in the money. Now, interestingly enough, you have an in spirit of bear flag pattern. You do have an in spirit of on the 60-minute hovering on the 50 moving average, although, again, you have that little bottoming tail that I do not like to see. That bottoming tail is suspicious, and you have to be cautious going into Monday, guys. Why? Because you have the healthcare vote this Sunday. Our Sunday healthcare vote, depending on how that plays out. Also, if does anything happen over the weekend with Greece or in Europe, how does the dollar react on Monday to everything? So it really tells you that while you have a bearish pattern here, the bottoming tail should send up a yellow alert line or a red alert line to be a little more cautious going into next week, all right? Now, again, overall, the markets continue to be overdone. You have to look at the market and say it probably is due for a pullback, but it's very hard to project out because the volume has been so light. If the volume, again, and I'm going to say this for you guys, if the volume is below 200 million on the SPY, there's a decent chance that this market is flat to positive. If it's more than 200 million, my projections show that it will be down on the market. Again, that's because institutions will be selling, and if institutions sell, we all know which direction the market will go. Also, we also know how much volume will be in the market, which will be quite a bit. All right, economic news quickly, guys. Let's just quickly discuss that economic news here. And we have a decent amount next week. Nothing on Monday. Existing home sales on Tuesday. FHFA home price index as well. On Wednesday, durable goods, new home sales, and crude inventories. Thursday, jobless claims, initial claims, continuing claims. And on Friday, GDP third estimate. Now, that's going to be interesting to see. Also, Michigan sentiment. That's what we have, folks. Have a wonderful, wonderful week. Come join In the Money Stocks Research Center. It is good stuff there. Get projections, get guidance, get calls, get it all. We'll talk to you there. Take care.